Intel. Wow, my phone was lighting up. I'm getting DM'd. I think I got 27 LinkedIn invitations from people at Intel. I mean, I got a 42 new followers. I mean, it was crazy next. But here's the net, and we're going to throw the red meat into the room and we can discuss it. But good quarter, lousy forecast.
It wasn't a good quarter. No.
Well, they met revenue. How about that?
Sort of. Okay. Yes.
Yeah. Net boils down to confidence at this point. There's a lot we don't know, and we'll try to get info on details about Oregon, the Ireland transition, Meteor Lake. You know, what changed to drive the 15% layoff numbers? Like literally changed between last quarter and this quarter. What could be the downstream impact from the layaffs?
I'll let Stacy go first.
Yeah, okay. I was just going to get my blurb out. And
no. What I was going to say though, Pat, is by the way, you can go first, then Stacy, I'll go last. I just wanted to laugh because I said something on Twitter, and I said something along the lines of had a less than ideal quarter. Was like how I tried to be nice about it, and I got someone that said, "Is that like the understatement of of a lifetime that you said that?" Because it's like I'm already sad. Like I think Stacey, you said in the green room, like I'm sad. It's like I'm sad. Like how do I say this without saying this?
Yeah, I'm sorry, Dan. This was supposed to be your lead in too. I just got so excited ahead of myself. I'm sorry.
It's okay. Go ahead, Pat. Finish your run because you were on a nice run. But it was less than ideal for me.
I mean, in the end, what can we take to the bank now that the company says that? And listen, I'm talking to their customers, their customers now. So, Stacy, the floor is yours.
You bet. So it was a less than ideal quarter for sure. So the quarter itself, you're right. It missed the consensus, but they had actually lowered their number early in the quarter because they lost their export license to Huawei, and the street numbers on revenue didn't quite fully incorporate that. So you could argue the revenue they did about 12.8 billion, was kind of in line with expectations. The gross margins were very, very bad. They printed 38%. So we're back with a 3 handle on them. And you got to remember that happened a little while ago, but really the last time that the gross margins had a 3 of them, I was in elementary school. It was 1986 was the last time. So it's been a long time. They were 500 basis points below on that. They printed 2 cents. I think the street was at 8 or 10 cents expectations. So the quarter wasn't good. And if not the best quarter for Q2. Q3, the guidance was horrendous. So they guided about $1.5 billion below the street on revenue. Gross margins, again, they guided like 38. It was like 750 basis points below the street. They guided to a 3-cent loss. It's nasty. And they even sort of gave some color into Q4. Q4 is like, I don't know, another massive miss versus where people. So those things are really, really bad. There's a few reasons for it. I mean, one is I just think the original guidance, they'd said last quarter that they'd get like, double, they'd get like, above seasonal growth through the back half. They had this like little hockey stick for whatever reason embedded in the numbers. So that's clearly not happening. There's some PC like CPU inventory channel flush. This is something I've been concerned of. We track this, pretty religiously, and we saw that, through the COVID swing, we had a big overshipment and then an undershipment. And I know in Q4 and in Q1, as far as I can tell, like the PC CPUs were back to overshipping by a pretty wide margin. So I've been a little worried about channel, and that's flushing out in the back half. And so that there's some degradation on revenue there. Look, I think they're still losing share. You can kind of look at what's implied for their like data center growth versus say what their competitors are putting up, and they're clearly losing share. So on the revenue side, it's not good. And then the margins are really horrible. And that's really where I think a lot of the deep concerns are going on. They're attributing this to a mix. They're ramping a new product for AI PCs called Meteor Lake. And the early parts are made in Oregon, and then they would typically transition those over to their other fabs, in this case, Ireland. And they made a decision. Their claim is they made a decision to make that shift early. And they said what that does is it saves them $1 billion in CapEx. So they think it's good. And maybe it's the right decision. But the issue is early in the ramp, the costs are really bad. And, so it's massively impacting the margins into Q2 and Q3. And then I also think even as those costs come down, just the cost of that part is lower. Or I'm sorry, the margin of that part is lower. The cost is higher. A lot of it's outsourced to TSMC, a lot of the tiles. So as that becomes a bigger piece of the mix, I think that impacts. And then they gave kind of color for next year. Margins are still going to be really impaired. I bet street numbers came down by 500 or 600 basis points for gross margins next year. And that's the Lunar Lake ramp.
Yeah.
Which again, they're very bullish on, but Lunar Lake is entirely made at TSMC. And so again,
that's right.
Are really bad. So it was not good. And so in response, they're taking action. So there were some news stories in the days before that they were prepping a pretty big riff. And they are. So they're laying off 15% of their employees. If I just take the Intel specific employees, that'd be about over 17,000 employees. So they're cutting OpEx. They're cutting CapEx this year. And although it's hard to say because I think the street CapEx numbers for Intel were already lower, but versus their plan, they're cutting fairly significant amounts of CapEx. They also suspended their dividend.
Yeah. They
had cut their dividend by 2/3 a year and a half ago. And they've fully suspended it now. So they're kind of in scramble mode right now, in survival mode, to try to right the ship. And then there's two other things that are going on, and these were already happening, but I think they're accelerating. They are getting subsidies from the government. There's the investment tax credit, and then eventually the CHIPS Act stuff. And then they're also getting what they're calling partner contributions. What they've been doing is they've been selling parts of some of their factories effectively to private equity. They sold half of the Arizona fab that they're currently building to Brookfield. That one's not operational yet. And then this quarter, they sold half of their Ireland fab, this Fab 34, to Apollo for $11 billion. They got that cash in Q2. Now they have to give up returns. They said that's going to cost them. It's like $700 million next year that they're going to have to give up, right, to Apollo. Apollo doesn't work for free, right? But they have cash coming in, right? And so that's what's going. But I mean, in general, it was a horrendous quarter. And then the issues that you kind of look at, so it's down, I don't know, 27%. I'm probably off by 20 minutes on this feed, but it's down a lot. I think the issue people are wrestling is like, how do you even value it? There's no real earnings. There's no free cash flow, and there may or may not be any terminal value, right? That's the question that people are having now. So it's going to struggle to fly to the floor right now. I think all the funds that held it, like in the dividend funds, it had a small dividend. I mean, they're probably going to have to sell. Like it's a mess. It's a real mess.
Dan, what do you got, buddy?
Look, I know this is Stacy. This is a mix, like you said, of being sad and sort of a victory lap because you've probably been. God, I'm sort of being sardonic about it because you've been sort of one of the more notable bears that just has not come around. And some of us, I mean, look, I admit when I get things right. In fact, I'm the first to always say it. And I also have to sometimes be the one to acknowledge when I get things wrong. And there's some things I've gotten wrong here. I mean, I think on some of the parts, like I think we kind of said about executing the say-do ratio thing that Pat likes to talk about. He's done a lot of things, but it just hasn't worked yet. It just hasn't worked in the numbers. I mean, the process, the getting things to market, the tape-ins, all the things that he sort of said would happen have happened. It just isn't. It isn't panning out. I mean, they're raising money, they're leveraging assets, they're shedding business units. This is like a GE story. This looks like a little bit like what GE started doing when, and it's like, when do you get to the minimum viable product where the market's gonna be like, this is where you've.
I mean, that's it. That's exactly. So I mean, they're spinning hope, right? It's like, we've got Lunar Lake, like it's a great part, supposedly they say, but the cost structure is not good. But then when we get to Panther Lake, which kind of launches, second half of 25, so it's kind of 2026 for volume. That's where it's actually on 18A, that's finally the process that they're saying is really good. And we're going to bring all those tiles back from TSMC, and so we'll be making them internally on our better, at that point, hopefully we'll have a better cost structure, right? And and so the margins will get better. So that's the hope. But I mean, even if you believe it, I mean, it's 2024 right now. That's a long time to wait. And we may have talked about this last time. I can't remember, but they had that Foundry Day a little while back, and they were talking about, we're sort of splitting the economics of the different parts of the business, and we're trying to incentivize like better behavior, better choices, and transparency. And those are all very good things. They need to do that. But I think I said last time, my biggest takeaway from that day was come back in 2030.
I was going to say is I got three quick bullets, and then we got to move because we probably could spend the whole show on. Go ahead, Stacey. Go ahead.
I just want to say there was one silver lining from last night. I maybe it's in your bullets, but I do want to say, like, and I was talking to Pat in the green room. Like I'm having sort of initially I was having sort of reminiscences of like AMD back in like 2014, where I mean the investment controversy at that time for AMD was, are they going to go bankrupt or not? And I think if this was a different scenario, if we didn't have the CHIPS Act and all these partner contributions, we'd be having like going concern conversations. I think Intel will live. I don't know what kind of a life it will be, but I think they'll live for. And the reason is if you sort of add up everything they're doing, you add up the cost cuts, you add up the capex cuts, the other cost savings, you add in the cash that they're saving from not paying the dividend, and you add in all the subsidies and these partner contributions. It's like $40 billion of cash, incremental cash on their balance sheet over the next like 2 years. It's probably 45 or 50 billion over the next 3 years that they would not have had. So that will, I think, save them from like they will live. So that's the one silver light. But the problem is I don't know what kind of a life it's going to be.
Yeah.
Yeah.
I mean,
Dan, what are your 3 bullets, buddy?
Yeah, so I'll make them real quick because we've got some more positive earnings to talk about now that, we can all wipe our tears and keep going. But bullet 1 is, the Gaudi thing has to be done. They have to get it right. They have to land. And that one, what I'm saying though, like, look, you cannot be relevant if you cannot get an AI processor for the data center it's
$500 million this year. Who cares?
No, well, that's my point. Like, so I'm not talking about now. I'm talking about like at some point that thing has to get competitive.
Well, no, it's not Gaudi. So they're talking Falcon Shores, which is the next one.
That's too far out.
Well,
like, literally, I know. I'm just finishing my thoughts though. Like, they got to execute with what they have because you cannot survive this. You're right. Like, I've actually said, I think I said to somebody, like, there's just no thesis right now to go in now. The only thesis is basically extraordinary value with a 10-year horizon. That's the only thesis I can really think of. The second thing though is they do have the wins and designs on AI PC. Whether or not it's super profitable, they need to saturate the market and show they can protect their market share. That's the second item. And the third is the world does need a strong Intel. The TSMC dependency is scary. When you actually break down how much we depend on Taiwan for everything.
I'll say something, and maybe it's controversial, I don't know, but like this whole CHIPS Act thing, like picking Intel as the national champion. Like, I understand politically why that happened, but I mean, to be fair, if we really wanted to get a ton of leading edge capacity built here in the U.S., we probably should have given all the money to TSMC and encouraged
totally should have
to build as many fabs as they could have made it as easy as possible.
But the thing is, they had to pick a U.S. company. That was the only way to do it. And second of all, and I'll actually say something controversial back to you, Stacy, is they did not. They picked them in sort of in words, but with the money they gave out, they weren't as nearly as clear that they were picking Intel. They gave almost as much money to Samsung, Micron, and to TSMC as they did to Intel. So they kind of said, blah, 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 Intel. But the money, they kind of said, we're not as confident as we maybe were articulating we are.